Guys, Pratheesh here. In this video, we are going to take a short look on the index via market profile. So we have a major event coming by. Elections are on 19th. Okay. So probably market how they are going to react during this event and what kind of volatility will be there, what kind of levels will be market will be testing. All these things we need to look into the chart, because for us charts are the only point at which we try to take some decisions based on that, and we trade and then we make money according to the charts. So let us quickly get into the Nifty and Bank Nifty analysis part via market profile on 3 different time frames. Okay, so today we are going to discuss since it is a weekly close, so we are going to discuss about the weekly, monthly, and then we are coming to the daily, or what you call as the intraday chat section. And all these charts are powered by tradingview.com. Okay, so I'm using this TradingView charts for illustration purpose for today, since it is very easily accessible even via a simple browser based. You can access it via mobile. Flexibility is there. So let us start with the Nifty first of all. So this is the Nifty monthly chart. Okay, this is the Nifty monthly chart, which is profiles are on monthly, and the time frame I have selected on a daily time frame. So it's very clearly visible what is happening on a larger time frame. So we could see that February and March profiles. Okay, March, what happened now? We started breaking the February high. So these arrow marks on the profile indicates that this arrow mark was there. No? Sorry. This arrow mark was here. So this indicates the opening of the month, opening of the particular month. And this arrow mark at the end of the volume profile, you would have one arrow mark over here. This indicates the closing of the month. Okay, this is the closing, and this is the open. Okay, so the monthly profile on monthly open was somewhere around here. We started going higher somewhere around breaking the previous month high. Okay, we started going higher but unable to sustain higher by the month end, and obviously we started coming down and closing inside the previous month. It's a kind of a breakout failure on a monthly basis level. Okay, you normally call it a breakout, like there was strong resistance was there, then what happened now? A particular price bar goes and closes above the strong resistance zone. So if it closes above that on any particular time frame, like 5 minutes, 10 minutes, 15 minutes, 30 minutes, you call it as a successful breakout. Okay, this is a price based analysis you are doing, and supporting analysis you can do with volumes. Okay, so many other parameters you can add to confirm the validity of the breakout. So just like that, if you're using only a price based analysis and you say that, okay, big candle, big bullish bar closed above the particular resistance, and then you call that as a kind of a breakout happening. So similar case here, we went above the previous month high but unable to sustain there and started coming down and closing inside the month. That means we went above the resistance but unable to sustain there. Something like this. Say like there was a strong resistance over there. Okay, we started going higher somewhere around here but unable to sustain over there. Then we left a sharp tail. Then we closed somewhere around here. Something like that. So this is kind of a failed breakout. So that's the case that happened in the case of March contract or March month. We closed inside the previous month. Okay, so let us look at what happened at the monthly. Monthly, we have a strong buying tail was there. Okay, the tails are nothing but single TPOs you called as a tail. If it is happening at the bottom of the profile, you called that as a buying tail. And if the same structure, if it happens at the top of the profile, you call that as a selling tail. So we have a selling tail and we had a buying tail, a kind of 313 profile with respect to March contract. Okay, so we had a sharp selling tail. So this is what you call a selling tail. I marked this zone as a selling tail. Okay, I already marked that. So I just hide all these levels. Okay, so this is your selling tail. So that means price went over there, and due to some reasons, we saw a quick rejection from that particular zone. You can see that volume profile doesn't show anything over there because there was no volumes traded over there. I don't know whether it is a free tick or something like that, but there are no volumes traded at this particular zone. So if markets want to trade higher, in the month of April, you need to have some kind of volume build-up happening in these rejection zones, so that we can expect, okay, the price could shoot up higher, breaking the previous month high. As long as we don't have any volume build-up happening in this rejection area, that is the tail, we are likely to rotate within this particular month. Okay, so that was the initial bias that was having when March series ended and we started opening the April contract. So April contract, where it is open, it is slightly open higher than that of the closing of March. It was slightly higher opening, but it was mostly inside the range. Okay, then what happened now? We started consolidating within the range, and after a few days, okay, we started going higher to challenge this selling tail. So what happened when we went to challenge this tail? Two things will happen. Either when we go there we could see a sharp rejection down, okay, or else we go there and we slowly consolidate inside this zone and bring a lot of volumes over there. So two possibilities are there. This is your first possibility, that is, as soon as you go there, you see some kind of rejection and price coming back inside the this particular area. That means the tail is rejecting the price. This is first possibility. And second possibility is that you go there and build some volume over there and consolidate over there. First possibility, we don't have any chance of price moving higher. And second possibility is that once you build volume over there, then we can expect price to shoot up later in the month of April. So these are the two possibilities over there. Now look at the closing candles. So what happened over here was we have been doing some kind of sideways price action here for 3-4 days in the month of April, and after that, what happens? There we got a clean breakout of these 3-4 days of consolidation. I think 5 days of consolidation, a clean breakout happening, and this breakout is going and challenging your tail. Okay, they went there, and there was initial rejection coming there. But the closing, I think the closing on that particular day was good, positive closing, somewhere around, it opened around 653 and closing was around 743. Okay, so hardly 70-80 points closing was there. And you can see the high was exactly at that rejection point. Okay, we went there, but there was some rejection, so we slightly closed below that level. And next day, what happened? No, next day we are getting any follow through. So like we opened at around slightly lower open 820, so we closed at around 748. Okay, higher opening, I think it's a gap up opening. Okay, fine. So we gap up, we opened with a very large gap. I think we closed at around 748, and next day we got a large gap opening at 820. That means we are right opening inside the tail. Okay, so open went up slightly, then open kind of open test drive or open test drive down. Something happened over here. We went, we opened at 820 and we hardly went 20-25 points upside. 840 or 845 we went, and then sharply we started a rejection. This is the possibility which I explained here. Okay, whenever you get this rejection, there could be possible rejections are there. We got that rejection here. We got that rejection here. But this was some kind of unexpected behavior. Okay, we opened with a large gap because everybody know that everybody must be thinking about these two possible scenarios. So market will not give you that scenarios in an easy way as you interpret in your charts. Our interpretation was that, okay, if it goes this level, probably that could get rejected. But what market did was actually they slightly opened gap up. Okay, once you get this gap up, now everybody will think that, okay, market has successfully crossed this particular high of previous day from where the rejection came. But once immediately that gap was closed, okay, then market started coming down and closing well inside the previous day's range. So it's a kind of a sharp rejection that is happening from this tail zone. Now what happens? Rejection happened, fine. Now we should have some follow through on the downside to confirm that, okay, this rejection is good enough to push the price down. But what happened again? Everybody thought that, okay, you could get a follow through downside on the next day because we got a strong rejection. In spite of a gap up opening, market could not sustain higher, and we started coming down, closing the initial gap, and then even coming and closing inside the prior day's range. So it's a kind of a strong rejection because closing was at the lower extreme, and what happened? Now all other parameters are supporting a bearish bias at that point of time. But everybody was expecting a follow through, but market has its own plans, right? So it will not give you very easily. So what happened? Next day, open itself, it indicated that bears are not going to get a follow through. because at the pre-market open and around 95, 97, you would get a conclusion that where markets are likely to open. So looking at the pre-market, okay, you can see that, okay, I tweeted that, okay, looking at this pre-market open, I suggested that, okay, bears are not going to get follow through. At the same time, bulls are also not going to get enough movement. So that particular day turns out to be an expiry day. So it's a very, very good opportunity for an option writers to make use of that particular day. That was the tweet I just pointed out that after looking at the pre-markets. Before pre-markets, you cannot do any analysis where markets are likely to open. It can open anywhere, right? It can open up or down somewhere around. But once the pre-market settles down, you could come to a conclusion that, okay, where markets are likely to open. So if it is opening inside the range, that means everybody was expecting that sellers are going to get a follow through. But if it opens inside the range, the sellers are failing badly. Okay, the sellers have failed badly there, and we could look for an overlapping session. So that has happened, overlapping session, but we did not cross the high of the previous day. Okay, to push the price higher. So 2 days of consolidation was there. Okay, somewhere some volume were coming over here. So what happened was here is that it is a kind of a sideways day. 2 days of sideways action was there. Now, idea is that it should come out of this 2-day sideways auction for a directional bias. Either it could go higher and break this 2 days high and sustain higher for an upside move, or else it should sustain this 2-day balance, 2-day low, and sustain down to come back into the previous area of consolidation. What is the previous area of consolidation? Is this 5-day balance actually? 1, 2, 3, 4-day, 5-day balance was there. Okay, so they should come and take support at that 5-day balance high or balance value area high or POC. So those levels are there for this 5-day balance. So that was the bias actually. So from the pre-market opening, again, you are getting some kind of information that, okay, this is likely to open down somewhere around here. Okay, so we opened here, then you got a clean follow through downside. So the idea is that this tail zone is not easily accepting the price for a reversal. Okay, that you should understood from this scenario. So there is a drop happening over here. So overall, if you see the March April contract, so overall, if you see the April contract, it is now in a typical sideways zone. So now we have comfortably come into this balance. I think 5-day balance was there. We comfortably came into this 5-day balance. So there is always an extreme possibility of market cracking all this 5-day balance and ending up at around 450 or somewhere very close to this level, 420. So this is a monthly low, right? Monthly low, or that a developing month low, 420. So this is the case what I'm expecting on a monthly basis view actually, because we have already come deep down into this balance. So probably is that we'll go and target the value area low, developing value area of that month somewhere around 450, 420 odd levels. And again, if 420 is being taken out, well, that is the developing monthly low is being gone, then probably we are likely to target the VPOCs of this particular month. The previous month, VPOCs around 340. So we'll go and target at 340. Then again, 255. All these levels will get activated once you break this monthly low. That is a developing monthly low. So this is from your monthly view actually. Now let us go into the weekly analysis of this thing. So weekly, what is happening? Weekly, nothing good was happening. Okay, we had some kind of, see this particular week. This week market was so, what is this, so erratic that you got multiple distributions. Even these distributions had some anomalies. Here again some single prints, again gap, and again you can see some kind of gap here. So too much anomalies and a kind of a poor structure over this. So when this week was completed, I thought, okay, if market opens inside the range of this particular week, okay, the immediate bias is to clear all these anomalies at least. So this distribution we can leave it. Okay, this is somewhat a kind of a well-defined auction zone. And when market started to break out and started going higher, it was making a lot of poor structures all the way right from the breakout. That is from around 400 to somewhere around here. So this entire distribution is fully kind of a poor structures. So when this was happening, my bias was that, say, like, if we did not sustain above this particular week high, this is your weekly high, right? If it not sustain above this weekly high, then the immediate business is to clear all these anomalies until this particular area. So this you leave it. This is the second category we look into later aspect, but at least to this level, 22, 380, 400 levels, it could come and clear. So what happened? No, we opened somewhere around here. We went and took out the previous week high, unable to sustain higher. Then what happened? No, if there is no demand for prices to sustain higher, then market will look to clear all the old businesses. So we came down, we consolidated over there, then we came down, cleared all these anomalies one by one, everything got cleared, and we started ending as a clean, balanced profile. Because there was nothing to do other than to clear these anomalies. That was the bias or objective of this week, as long as we got a failed breakout above the previous week high. The market opened inside the range, and they started repairing one by one all these things. Then all of a sudden we got a breakout. Breakout again did not sustain. Then we came down, we repaired all these anomalies. Okay, still few are there, but it will take time. But we repaired, and then we started giving a clean, balanced profile. So once you get a balanced profile on a weekly basis, then expectation is that to get some kind of imbalance in the coming week. So the imbalance could come above the weekly high or above the weekly low. Somewhere around you could get an imbalance move. So this week, what happened now? We started opening slightly higher, above the value area high of the previous week. That is exactly into the tail zone. This double print tail was there. No? Double print tail was there. And if you look into the weekly structure of the previous week, you can see that's kind of a poor highs are there. Okay, poor highs. Normally, poor highs are something like unsecured highs. That means upside probe zones is not yet completed. Upside is not yet completed. And the downside, if you see, you got a clean tails over there. Clean tails at the bottom. So this is something called a secured lows actually. So highs are unsecured. So highs are unsecured. The previous profiles somewhat poor structures has been repaired, and we got a clean balance structure. So now the bias is to get some imbalance. Okay, so we opened inside the range, but what happened now? We started breaking the previous high, and we started going higher. After spending time here, then we started going high. We targeted somewhere around 840, 850. That made an all-time high. Then what happened was we again gave a sharp pullback, went up, bit of consolidation. Okay, now we close somewhere around at the bottom of the profile. So this is a kind of weakness in the market. Why? Because value wise, if you see, you are having a higher value placements compared to the previous week. Looking into the value perspective, your previous week value was somewhere around here, and this week value was somewhere around here. So if you look, there is comparatively it's a higher value week. Okay, higher value week, but we are closing at the lower extreme of the week, that is below the value area. So higher value plus price closing below value. Okay, this is a kind of weakness at this point of time. Whether you could get a follow through or not, that market will decide on the next session. But at this point of time, we don't know whether we'll get a follow through or whether we'll start consolidating again within this week, starting next week. We don't know what if markets are likely to do. But current situation is that markets are weak. Okay, monthly is balancing, weekly is one time framing up. But the current week structure tells me that the closing gives me an indication that in spite of having a higher value area, price is closing below the value and at the lowest extreme of the week. It's a kind of a weak scenario. Obviously, if you get a follow through, what happened now? If you get a follow through, we could penetrate the entire balance of the previous week. That was the immediate bias, because we came and closed below the VPOC of the previous week. Okay, there are two VPOCs mentioned over here. Don't get confused over here. This is your price-based VPOCs are marked in, what is that? Green color, and these red color lines are your volume-based VPOCs. Normally, we use volume-based levels for our analysis. So this is our VPOC. So we market close below the VPOC. So it is easy for the market to get a follow-through and come down and penetrate this entire balance. Okay, penetrate this entire balance. Possibility is high at this point of time till they can go and target this secured tail, which is somewhere around 420, 460. So what is 420, 460? 420, 460 is the weekly tail. At the same time, it's a monthly low. So you have to be very careful when market test this extreme level. Why I'm saying is because when markets test these extreme levels, probably what could happen is a kind of a breakdown failure could happen. Okay, say like we closed over here. Okay, if market opens via gap down, okay, and opens somewhere around here, and suddenly takes out of your monthly low or this weekly low, okay, then it can do something like this. It can do something like it can trap everybody below this monthly low and weekly low. So if at all markets get substantial strength to trade in this tail or sustain in this tail, then only shorts have an edge. Say like if it gaps down, okay, the probability is applicable only if it has a big gap down opening on Monday. So like we close somewhere around here, assume that we open somewhere around here. So like 100, 150 points drop is likely to happen. If it happens, then we have to be very careful that, okay, there could be trapping all shorts at this extreme and they could reverse the market till 520, 500, 520 levels. If at all, if we sustain, then probably below 420, we'll go and target these levels 360, 320, 360, 380, 320 levels will be there because this is the weekly profile. You saw the weekly profile. No? Weekly profile, you have this kind of anomalies over there. So once this tail is given up, the objective is to clear out all these anomalies in the previous profiles. Okay, that means the tail zone comes somewhere around here, 382, somewhere around 440. This is your zone. Once you get price getting accepted in this zone, then the bias is to clear all these anomalies and target these 260 levels. Okay, these are extreme scenarios, but we don't know whether it will happen today, tomorrow, next week, or next month. But these are one of the probable scenarios because at this point of time, everything looks in a not in a comfortable situation for Nifty bulls. Okay, we don't know what kind of reaction is going to be there on Monday. But if it opens inside the range, then there will be, I think, there will be not any immediately a sell-off should happen. Say like if we open below this weekly low and then we sustain there for some amount of time, then this is the possibility. Okay, so these are some of the possibilities using market profile. At this point of time, markets are not good for bulls. Okay, this is in the weekly time frame. Now coming back into the daily structure, look at this daily chart. It's again kind of a consolidation happening. Say like you had a strong tail over here, so this was considered to be a swing support. Why? Because before this tail, we had a clean balance of say like 4 to 5 days, I think. So we had a tail of 1, 2, 3, 4, 5, 6 days of consolidation. We had a 6 days of consolidation. So this takes a little amount of time to load. That's why you're not seeing this chart. Okay, let it load, no problem. These are 3, 4, 5, 6 days of balance actually. So market gave a breakout of 6-day balance on a daily chart, on an intraday chart, and this breakout happened via this tail, and this tail was there and making a clean short covering profile by the end of the day. Then from there, markets again started going higher, but there was no momentum. You can see values are overlapping, and you can see some inside days are there. No momentum. Okay, if the breakout was really strong enough, now you would have made higher value areas, and then we start moving higher. But you look into the structure of the next day after the breakout, you can see the values are overlapping. That means no momentum on the upside. No big momentum is not there on the upside. Again, what happened? We went sideways. Sideways means completely overlapping value. You compare this profile, first profile and second profile, there is a limited amount of overlap is there. And you combine the second and third is 100% overlap. This tells you that, okay, there is no momentum in the upside. Because values are completely overlapping. Started with a small overlap and then shifted to 100% overlap. So no momentum in the making inside day. Then again started coming down, and what we considered that this was a swing support because this tail has been generated as a result of a 6-day balance breakout. So we got a tail. So as long as price don't come and accept inside this tail, we are good enough. That was the bias. So here what happened now? After inside day, we started coming down, making a kind of consolidation, a balancing, then again a extension of the balance coming down, and we started consolidating inside this range for pretty amount of time building volumes over there. You can see the volume comparisons. This area, you can see the volume comparison in this area, as well as the same area when it was traded 2 weeks on 8th. Actually 8th we have very thin volumes are there. Now we can see some bit amount of volumes are coming there. So this indicates that this tail is accepting the price. Okay, acceptance of this particular tail is likely to look for a reversal. So what is there to look for a reversal? We have a 5-day balance or 5-6-day balance was there. Probably they could penetrate the entire balance and go and test this tail. This was the tail we mentioned on the weekly profile. Okay, 420, 460. That is the ultimate target, and if it sustains below that, then we'll go and look after further targets. So this was the bias actually, and say like if you want to stay higher, assume that market doesn't want to go down and it wants to go higher, then probably we could get into this distribution. So we have two distributions over here. Okay, this is your upper distribution and this is your lower distribution. Say like price opens and goes above this distribution, so 680, 690 levels. Okay, open here, straight away ignore the distribution and get into the upper distribution. So what happens here is that when this happens, it's a complete panic will be there from the short side. Why? Because shorts are now comfortable because price has closed into the lower distribution, VPOC has shifted into the lower distribution, and we got acceptance inside the tail. So a lot of supporting factors are there for a BS. Okay, but with all the supporting factors, they are looking for a follow through. They are looking for a follow through down, and if that follow through is not happening and price immediately goes and enters into this upper distribution, all these shorts in these particular distribution will run for a cover. Okay, and that immediately pushes the price up to this tail zone. And again, from there you can get a rejection or you could get acceptance and then go and clear this FA at the top. This also could happen. We don't know what is going to happen, but at this point of time, the probability for this particular move to get into the upper distribution is very, very limited chances are there. Say like out of 100%, you got only 30% chance for this particular behavior to happen, but we cannot ignore that, right? Okay, so it's completely having a clear understanding of the markets. Okay, we are not here to predict what market will do, so we cannot go and predict that market will go down by 300 points. We are here to assess the risk on a daily structure. So which side you have a highest risk and which side you have a very low risk of making money. That is what we need to understand it from the charts. Charts are not used for any predictions. Okay, charts are used to analyze which side has the highest probability of making money and which side we have a lowest probability of making money. Now the highest probability of making money is on the downside. Okay, but it doesn't guarantee you that 100% you cannot make money. Okay, there is 70% chance that markets may go down, get a follow through. There is a 30% chance that market will not get a follow through and we start going back into the upper distribution. So now choice is yours. You can either follow the 70% guys or you can ignore these people and you can join the 30% crowd. So these are possible opportunities. Okay, you have to be prepared for both, right? You cannot train your mind to be bearish or bullish all the time, because we are not going to get medal for our bias. Okay, the ultimate aim is to we need to change our bias in the market for some time. Okay, you said that some people ask me that, sir, you are bearish on overnight, but suddenly you turn bullish. Okay, then I ask him, okay. Oh, I told you like that. Okay, okay, fine, not a problem. But for me, making money is more important than being right. Okay, so being right at the end of the day, some people will price you on Twitter that, okay, sir, you're a very nice person. Whatever you say, markets are obeying. You're market maker and all. But at the end of the day, I didn't make any money. What is the use of that? Zero. It's not going to help me in any case. Okay, so view may go wrong 100% of the time. Okay, my view is not as good as what is a prophet predicting the market. Okay, so it's likely a 50-50 chance is there. Okay, I always give my views at around 50% chance. Okay, so 50% chance is there, and the remaining 50% you manage your risk accordingly. If you're wrong, you get out very quickly. If you're right, you stay there and extend your probability of winning. So that is how you make money in the markets, right? Not every time you are being right and not making money is again a biggest problem. Okay, so that's all with respect to Nifty. Now let us take a quick look of Bank Nifty. So what is happening in Bank Nifty? Bank Nifty, if you look into the monthly structure, something surprising. You can see here, monthly breakout, failed. A kind of closing was somewhere around, where is the closing? Oh my God, somewhere around here. Opening close was somewhere around here. We went there and closed here. Okay, closing was again back inside the previous month, kind of a failed breakout. And now month of April, what it has done is it has given again another breakout above the previous month high. March high has been taken out. And now we can see this monthly structure is a kind of a double distribution. You can see here. Na? So this distribution happened on a particular day where there was a late spike in the evening. I think a few days back, 3-4 days back, we got a late spike in the evening, and that resulted into a double distribution day or a double distribution structure on a monthly time frame. Bank Nifty futures. This is an April contract. Okay. So now this double distribution single prints are going to be a crucial support for this particular instrument. Where we have closed somewhere around here. We are still in the upper distribution. But what is not supporting here is for this is that the volume point of control is at the lower distribution. We have not pulled this volume point of control to the upper distribution. That means we need some more amount of volume to come here so that this volume point of control may get migrated on the upside, upper distribution. That means we need not dip into the single print. Okay, we need to hold on to this upper distribution and consolidate and build volume for next couple of sessions, so that there is a possibility of volume point of control shifting from the lower distribution to the upper distribution. Okay, that could happen. Or else what happens, price comes, price coming down and breaking this extension singles and then traveling into this lower distribution means price will come and test this VPOC. Two possibilities are either POC goes there or price comes down. If price comes down means they will come and test this POC. That price comes and enters into the second distribution means there is high possibilities that the price may touch the POC. Okay, if that's not happening and markets are staying in this upper distribution and building some more amount of volumes so that the POC will get migrated. If that happens, there is a strength actually. This one, okay, price consolidates within this upper distribution and pulls the POC higher. That is a kind of a strength. Okay, there is a kind of strength in the markets, and if that's not happening, then probably it's not strength; it is a kind of a weakness, right? So everything depends upon now the single print level. That zone, so 340, somewhere around 340 to 540 or 600 levels. So this is an extreme important support zone as of now in a monthly chart. Okay, below 330 or 340, straight away we'll drop it to the monthly lower 587 somewhere around. As long as this double distribution is the single prints are not taken out, we need not to be too much bearish on this particular instrument on a monthly basis. I'm saying. Now let us look into the weekly of this particular instrument. What is happening on a weekly chart? Weekly chart again, nothing much. We have been one time framing higher, so we starting from this week we took out the previous week high. Okay, then again what happened? We started again going higher. Okay, again going higher. So weekly is one time framing up, and here also the same scenario, higher value area week, and we are closing somewhere around the lower extreme of the week. So there is a kind of a neutral scenario. Why? Because weekly is one time framing up, monthly is one time framing up. Okay, weekly is slight negative factor is that we are closing at the lower extreme of the week, but not below the value area. But okay, kind of this thing. So the important support again comes here at this spike base. So this is the extension that you have seen in monthly, right? This is the extension. Okay, it starts from 340 in the monthly, but if you look into the weekly chart, there was a spike base at around 48,500 to somewhere around 48,700, 750 levels. This is the area on a weekly chart. Now, what happened now? We started the week, we opened inside this spike, and this spike is getting value. So it's a kind of a bullish scenario, and price went up. Okay, there was a small dip into the spike base, but immediately responsive buyers came into the picture and they put the market higher, and They went higher, but again there was no momentum, and they started closing the week kind of a balanced profile. Some kind of anomalies are there, but still it is a balanced profile at the top of the week. So this is not a good positive structure for the bulls. It's a kind of a neutral view at this point of time, because we cannot say that it is completely bearish, and we cannot say that it is not a bullish structure, because the profile itself is saying that it is not interested to go higher or interested to make any directional bias, because we have clean direction balanced markets. So it's a kind of a neutral view as of now. Okay, because weekly is up, monthly is up, everything is up. Okay, at this point of time we cannot stay that bearish bias. So let's say if Monday market opens and takes out this weekly low, okay, let it take the weekly low, then we'll turn our bias into from neutral to bearish. Till that point of time, we will take it as a neutral bias only. Okay, because there are more chances, because if you see the monthly possibilities, I told you, VPOC should shift upside or the price should come and test the VPOC. Two possibilities are there. We'll look out whether which is getting activated on Monday's opening. Monday opening will tell you that which possibilities. Now there are 50-50 chance for each of these possibilities. So Monday open will tell you that which side has that edge. Okay, so weekly is up. As long as we don't trade below this weekly low means we almost come back into the spike base. So once you clear this 48,500 level, and below this 48,500, you had a clean balance. Okay, with some kind of HVNs over here, and then we start coming down. Clean balance was there. So below 48,500, it is very, very bad situation for bulls. Okay, within a couple of days or within 1 or 2 days, we can immediately go sharp down to test this VPOC at around 47,900 or 48,000 round number, somewhere around. Possibilities are very, very high if we take out this 48,500. 48,500 is a very important reference, because of the monthly basis, it comes around that. Monthly's double distribution single prints. Monthly's double distribution extension handle comes around this level, and weekly spike is coming around this level. Spike base plus weekly low. So all these references are coming very close to each other. So once this 48,500 goes, sharp drop will be there till that 48,200. Then again, if it sustains, then it can go and target 47,900, the worst case. So you have to be prepared for 47,900 if 48,500 goes. If that is not the case, then markets are not interested to break 48,500, and they start trading above 48,700 or 750, then the immediate bias is to fill this area. We had a dent here. Okay, we had a small dent here. So say like if you are not able to get a follow through below 48,500, and we start coming back inside the previous weeks or the value of this previous week and stay higher somewhere around 48,700, 750, then the immediate bias is to fill this dent, the profile. Once you fill this, then we'll decide the next direction. That possibility is also there. So at this point of time, it is a neutral view with respect to Bank Nifty. Now look into the daily structure of this Bank Nifty. Let us look at the daily structure. Okay, so daily structure, what is happening? Nothing is happening. After this spike, as I told you, there was a spike base on 5th of April, which created a double distribution on a monthly as well as weekly close was there on Friday. So you got a spike on Friday, so that it adds up at the weekly high. Okay, weekly high was created via this spike. So now the spike base is very important. Next day we opened over here. There was a dip towards the spike base, very near to the spike base, but bulls responded well enough and closed the market at the higher end, somewhere around here. Next day again higher opening. Okay, went up. Then again an inside day, and again another kind of overlapping structure. So now we have a 4 days of balance over here. 4 days of balance. The balance extreme is somewhere around 48,500 or 560, and the upper extreme is around 49,100, somewhere around. So now we need to look out whether we get a sharp extension from this balance or not. We break below this and sustain higher, sustain lower, then we could pull it down to this tail. Okay, 48,000, 4850. That is I told 47,900 to 48,000. So that is the possibility that we are having, because this is a clean balance. So once you sustain below this 4-day balance low, okay, then it is easy that okay, then it is Monday, Tuesday, Wednesday. Okay, one day holiday was there, so it was a weekly low also. So weekly low, 4-day balance low, sustain below this 4-day balance low, straight away drop it to 4800 or 4850. So once you get a confirmation that price is getting accepted below this 4-day low, be prepared for this level. Minimum, I'm saying. Okay, 48 or 48,700, 47,900 levels. And say like if there is a trap, say like they dip below this 40 weekly low, but they took support from the spike base or somewhere around spike base day, spike day is there, no? That particular value area high is somewhere around here. So if they get some kind of support here and then we started accepting back inside this 4-day balance low, then we need to look for reversals. Okay, that kind of trap also can be there at that market opening. We have to be very cautious about that, because balance extremes are one of the most extreme, one of the most traded area where we need to exercise a lot of caution. Balance extremes, either at the top of that consolidation or at the bottom of the consolidation, because once the consolidation higher low is being taken out initially, everybody will rush there actually. Whoever had stops below that consolidation, whoever are coming fresh shorts over there, so a lot of liquidity will be there at these extremes. So easily you can get manipulated, easily they can reverse the market from such levels. So we have to be very careful when you are trading these weekly extremes or any extremes. So we need to watch for a solid confirmation before pulling the trade. Just like that, as soon as market opens here, don't go and punch an order. Within seconds, it could reverse back. Okay, so wait for a solid confirmation in terms of volume, in terms of price, or in terms of any other confirmations you are using. Okay, I use order flow and volume-based confirmations to pull a trigger. So same way you have some parameters for pulling the trigger. So wait for that confirmation to happen and then go and take a trade. Otherwise, it's very difficult, because as soon as you pull the trigger, you would have stopped out. Okay, because the point is that what I'm saying is that as soon as you put a trade, even before you go and place your stop loss order, market goes above the stop loss. Okay, there is very knee-jerk reactions will happen at around these balance extremes. So you have to be very cautious when you're trading at balance extremes. Either it may be a 2-day balance, 5-day balance, 10-day balance, whatever balance it may be. Okay, so that is the bias as of now with respect to these weekly and monthly structures of markets. As of now, Bank Nifty is neutral. Okay, and Nifty is a slightly bearish bias at this point of time. Let's see what happens on Monday. I'll update the scenario that happens with respect to the pre-open and the open of the market. I'll update it on Twitter. You kindly follow my Twitter handle, TradeProSM. That is my Twitter handle. You can just follow there. You can check a lot of analysis, a lot of charts have been posted there. Study charts have been posted there. It may be right or wrong. You don't go and find out how many rights and how many wrongs. You are not going to give me any marks for that, and I don't require marks for that. Okay, it's just posted based on the purpose of analyzing the market, studying the charts. That's all. Okay, it doesn't guarantee that every study goes 100% right at every point of time, but there are some interesting facts and scenarios I have presented over without any bias in mind. Okay, clean analysis will be there without any bias. We are doing that. So a lot of charts you'll be finding there, because I have been doing this for the last 5-7 years. You can scroll down the profile. You will see only market profile charts for the last 5 years I have been posting. Okay, so it's a kind of passion that keeps me to post and work with market profile at every point of time. Okay, so that's all, guys. With this, I'm closing this video. I hope you have all gained some little bit knowledge about the coming week and how we have to prepare accordingly. Okay, if you have any other technical systems with you, observe these levels also along with your technical system, and do take reactions as per your system. Okay, I'm not saying that you go and follow my levels to take a trade. Okay, if you're using any system, actually you just watch out these levels with respect to your system. And if your system gives you a sell signal or a buy signal, go and pull your trigger based on your systems, because you're following that religiously, right? One day you cannot change anything, so you just follow that. Okay. Thank you guys. Thank you for watching. Have a nice day. See you all at another video and the weekend. Thank you.